Success is achieved and maintained by those who try and keep trying. W. Clement Stone. And Mr. Stone hits the nail on the head. You try and you keep trying. You come up with a plan and you work that plan. You stick with it. That's what we talk about here every day. 10 to 15 minutes is all we ask, but you got to do it every day. You will not otherwise understand the nuances of the things that we talk about here. And what do we see happening? Markets moving exactly as we had hoped they would. Bonds up 1.55%. Ha! Gold a booming 3.14%. We see stocks, the S&P 500 down almost 3%. The Nasdaq 100 down over 3%. So again, things are looking nice. Now, it is a nasty world out there. We saw things boom up 5% on the Nasdaq 100 yesterday on Monday, only to revert back over in which direction? In the direction of the price percent oscillator heading down. Doesn't mean that tomorrow. Everything is being driven by, it seems, so much of this corona news. And who's taking advantage of that? All sorts of people shorting the market, going long the market, driving things down. But when we see bonds and gold going in the opposite direction of stocks, it makes us feel better. Why? Because that's the way the world's supposed to work. If bonds and gold are down, stocks should be up. If stocks are down, bonds and gold should be up. And again, we want to see things moving conversely between bonds and gold and stocks. And we do see that happening today. It was not happening yesterday. Now, let's start first and foremost, as we always do on the weekly chart, with the S&P 500. By the way, we have our options course. We're releasing that again. If you haven't taken all three parts of it, part one comes out today. If you're not a subscriber to chartingwealth.com, you're not going to get it. How do you get it? Go subscribe. Chartingwealth.com for free. Put in your name, email address. We never spam that list. We'll get you those trainings. Now, and it's a great course. We have had nothing but rave reviews of it. You want to understand options, how to practice trade them for free. This is the course you need for free. It is the best we have to offer. You will love it. Okay, we see a red down candle forming. Now check it out. We look at the wick the prior week. We have not reached that low yet. We do have a red candle body that's further down. But again, these are Heikin-Ashi candlesticks. We want to see that wick or the candle itself drop lower than the prior wick. We want to see that happen. Hasn't happened yet. Now you might say, wait, who wants the market to drop? We do. We want to follow the trend in whatever direction they go. What's the inverse fund of SPY? The single inverse, SH. It's the ProShares short. Look at what it does. It goes up when the S&P goes down. We have another one if you're interested in the Qs, the Nasdaq 100, PSQ. Oops, putting the wrong PSQ. It's the short of the Qs. It goes up in the opposite direction of the Qs going down. So it's important to understand a little bit of the, just a little bit more sophistication. That's all we're talking about. So let's go back. So we see the price percent oscillators heading down at more of an angle like it was the prior week. It had really dropped that angle. It accelerated down again today. Derivative oscillator, the leading indicator, the lagging indicator, the price percent oscillator, both of them heading down nicely. We go from the weekly to the 2-day. What do we see on that 2-day? Well, we have a green spinning top at this point. Now, remember, this is the first day of the latest 2-day candle. The prior one ended on Monday. This represents just the movement on Tuesday. We will see what Wednesday looks like and wraps that up. But that is a green. Again, it's not an open box, but so it means a slow down in the go down, as we like to say, but it is a spinning top, means indecision. Lots of indecision. Price percent oscillator, however, still rocketing back down again, and the derivative oscillator gaining downward momentum. We would like that candle to be solid red with no wick on top and just a wick on the bottom. We look at the 4-hour chart. We see that the price percent oscillator refused to cross, was worried that was going to cross over going up in the morning. It hasn't, but it hasn't dove. Would that be the right dove? Dived in the opposite direction yet. It is paralleling. We would like to see that really arc over and move down. Derivative oscillator has gone positive. We see at the end of the day, though, went from solid green to a red spinning top, indecision tending down. So again, what we're paying most attention to is the price percent oscillator on the 2-day heading down strongly and the weekly heading down strongly, which is good for continued movement down, which is what we want to see. Now, why? Because that's our trend. We want it to go in the direction of the trend always. We go to the Qs, the Nasdaq 100, 3.21% down for the day. And again, as we move the weekly vertical crossover over, you see we've still not plumbed the depths as far as the wick goes on the bottom of the candle as we did the prior week. We see the derivative oscillator gaining downward momentum, price percent oscillator heading down. We go from the weekly to the 2-day. What is the 2-day showing us? We have seen that turn into a doji. That means indecision. It's green, tending up. Price percent oscillator still heading down. Derivative oscillator heading down. Just the first day of the latest 2-day candle. So we'll continue to watch, pay attention to what there is to see there. We'll just see how that leads us, and we'll watch and see how it develops. We go to the 4-hour chart. Up in the morning, down in the afternoon. Wouldn't crossover, which is good. Didn't want to see that happen, but we're not as worried about what happens again on that 4-hour chart as we are the 2-day and especially the weekly. Still decidedly down. Now we leave stocks. We go where? Always to bonds next. We wrap up with gold. Look at bonds hitting a higher high. Candles bigger than the prior week. We're only 2 days in, but looking nice. Derivative oscillator gaining upward momentum. Price percent oscillator heading up at about the same angle it had been the prior week. That is good to see. We like very much seeing that. See if we can redraw our trend line a little better. Perhaps that's a little better on the weekly chart. And we go from the weekly to the 2-day, first day of the latest 2-day candle. We are reaching a higher high. The body is a little bit higher than the prior. And look at that price percent oscillator going up about the same angle. Derivative oscillator gaining upward momentum. Go to that 4-hour chart. Down in the morning, well, sort of a red spinning top in the morning, up in the afternoon. Price percent oscillator heading up. Derivative oscillator still losing momentum. So again, keep an eye on things. Again, pay most attention to the weekly and then the 2-day. Those are still looking nice for continued up movement on bonds, which is what we want to see. That's where the money should be flooding into if the market is indeed crashing. What do we see on gold? And again, folks, I don't want anybody to misunderstand. I don't think it's wonderful that the market is crashing. I think it's wonderful that we're able to track the direction that it's going. And that's, of course, what we're interested in doing so that we can follow that with an inverse fund for a practice trade. Am I making sense? We don't care the direction of the markets. What we care about is being able to track them in that direction. In a scenario where you don't want to short the market, you're just out of the market in your practice trade. You let it go down and you get back in after it bottoms out and the trend reverses. Or you go into something like gold or bonds, if indeed they're moving in opposition to the market as they are now. Gold up for the day, 3.14%, up booming. Price percent oscillator, which had been heading down on the weekly chart, reversed, started heading up. Derivative oscillator still losing momentum. Don't like that, so we'll pay attention. We see that we have a red spinning top open box, which again means indecision. And it's not a solid red candle, but it's still quite iffy, particularly after the prior day in gold, where It did not move up much, if I recall, what we were like yesterday in gold. And then, of course, we see on the 2-day chart, had a big down candle in gold. And, of course, what did gold do? Bounced off the red signal line. However, derivative oscillators still went negative. Price percent oscillator is pulling away from the red signal line. Green spinning top indecision, tending up. We go to the 4-hour chart. What do we see there? Hasn't crossed over, going up yet. Up in the morning, further up in the afternoon. Hasn't crossed over. Again, we'll continue to watch and see. Derivative oscillator still way negative. So gold is trying its best to start laying a firm foundation for more and longer up movements. We'll see just how that goes. Folks, that's where we are as we end the day on Tuesday. Exciting, things turning around, going back in all directions as we want them to go, as our charts are showing they should be going. That's good. We like that. Okay, folks, that's where we are as we end the day. God bless. All the best. Do take that training on options. If you're not subscribed, go to chartingwealth.com, sign up. We'll get it to you. You'll see it in your show notes. God bless. All the best from the whole team at Charting Wealth World Headquarters.